Okay, hello and welcome. I'm Stu, the Community Manager at FinTech Australia, and thanks so much for joining us this evening to discuss the opportunities in the UK for Australian FinTechs. I'll firstly acknowledge the traditional owners of the land in which we stand and pay my respects to their elders past, present and emerging. So as I said, thanks so much for joining. Just some quick housekeeping before I hand over to the panelists. If you have any questions throughout, please pop them in the chat box. And the last 10 or 15 minutes will be allocated to questions. And the first 40 to 45 minutes will be moderated questions. And that's everything. If you have any issues, please do put your comments in the chat box and I'll be able to help you out there. But now I'd like to hand over to Anna Nishnianitsa, Austrade's Trade and Investment Commissioner based over in London. So thanks so much, Anna, over to you.
Thanks very much, Stu, and thank you and FinTech Australia for bringing us all together today for this session. We're very pleased to be working with you and the broader team over at FinTech Australia to support expansion of Australian businesses into different markets. So as Stu mentioned, I'm Anna Nishnianitsa, Trade Investment Commissioner to the UK and Ireland. And for those of you who are not familiar with Austrade, we're an Australian government agency focused at enabling and supporting expansion of Australian businesses internationally and attracting foreign direct investment into Australia. We don't do this alone, so we do work very closely with states and territories, with industry partners like FinTech Australia, as well as partners here in market in the UK and in Australia. And today is a perfect example of how this ecosystem of partners can come together to provide you with a deep dive on how to do business in different markets. And today we're focusing on the UK market. We're joined today by Peter Kinane, Director of International and National Initiatives at Innovate Finance. Innovate Finance is an industry body representing the UK FinTech sector, and Peter leads on developing Innovate Finance's international and national initiatives to support and promote UK FinTech and the opportunities. We're also joined by Peter Bard, partner at Gately. Peter has vast experience acting for blue chip and public sector clients on the procurement and implementation of mainstream and emerging technologies, particularly those involved in financial services and international data flows. Peter also specialises in associated regulatory issues such as those affecting data protection and e-commerce. Austrade works very closely with both Innovate Finance and Gately, and they're very close partners with us. And if you're engaging with us in market, you will likely be working very closely with them as well. We're also very fortunate to have Katrina Down, the founder of Miko, with us. There's nothing better than hearing insights from your peers who've already done it, who are already expanding into the market and doing this. So we're very fortunate that Katrina can join us to share her insights. For those of you who don't know, Miko is a personal data and distributed ledger platform that enables people to securely exchange their identity and personal data with people and organizations they trust. Katrina has been pioneering personal data rights since 2002, and now within the context of GDPR, open banking, distributed ledger, cloud, AI, and Internet of Things converging, Miko is both possible and necessary. And we're also joined today by Jonathan Jeffries. JJ has assisted some of the world's most impactful businesses, including Stripe, Square, Etsy, Dropbox, and Go Cardless. He has built strong global working relationships with a wide variety of business leaders, including founders, investors, and technology executives, and has executed projects across technology transformation, digital transformation, local and global growth. So we've got as you can see, we've got a great group of experts here to take you through some of the tips around the UK market today. And as Stu mentioned, instead of really talking at you for this for an hour, we thought we'll have a panel discussion which I will facilitate. And as Stu mentioned, there's also some time for questions from the virtual audience at the end. So please do make sure you pop your questions into the chat area. Just before we kick off, I wanted to mention just a few small or large facts. Just to give you a bit of a context, with an average annual growth of 16%. The Australia-UK FinTech Breach Agreement means simplified market access and registration, alignment across our regulatory environments, access to sandboxes and innovation hubs. We're also getting closer to signing a Australia-UK FTA, which will offer even a broader range of opportunities. UK has the third largest tech sector in the world. The fintech sector is worth than 11 billion a year to the UK economy, and a record high of 5.7 billion was invested into UK fintech sector in the first half of 2021. So all of this creates a pretty exciting landscape, but I'm not going to lie, it's not easy. It's a very mature, competitive and regulated market. So today we have a pleasure of exploring the opportunities as well as challenges and how to navigate those to succeed with our panel. So with that in mind, I might go to Peter Kinane first. Peter, the UK's leading developing fintech centre. Would you be able to provide some insights on the capabilities and the environment for fintech in the UK?
Of course, thank you, Anna, and thank you also to FinTech Australia, to Stuart, and to Austrade as well for the support and the invitation today. Without a doubt, the UK fintech market is a leading global hub and is a mature market when you come to it. And as Anna's already mentioned, that level of investment that we saw in the first half of this year has really broken several records and sort of demonstrates the maturity, I suppose, of the market as well, surpassing the $5.7 billion US, surpassing previous totals for the entirety of 2020 and 2019. And we've seen some pretty significant announcements over the course of the year as well. Over the summer, some pretty sizable growth stories from Revolut, from Wise, from LendInvest and others, which really sort of indicates the size of the market and perhaps the size of some of the companies here. But I represent Innovate Finance, and as such, we represent the whole of the fintech sector, the global fintech sector based here in the UK. And within that mix, you have a sizable number of startups and scale-ups that are also looking for partnership opportunities as well as a number of financial and professional service institutions within our community that are looking for partners from overseas, that are looking for opportunities to either update their own technology or to work to support the sector in some way. And I think this sort of competitive mix within the UK has really done as well, particularly over the last 18 months, which has been, you know, as it has been everywhere, very difficult for business, very difficult for individuals, of course, as well within the businesses. So we're seeing, you know, huge opening up now in terms of on the back of discussions like the free trade agreement with Australia and elsewhere, on the back of other opening up post-pandemic opportunities for businesses to connect and engage with other markets. We're seeing a real interest in what the UK has done in fintech over the last few years from other markets around the world, and that in itself sort of lends opportunity for those businesses that choose to locate here. We're also seeing an increased role for digitalization across the economy and across other areas of the economy as well. Earlier this year, we had a substantial review of the sector led by a gentleman called Ron Khalifa, and the Khalifa review of UK fintech has very much set us a roadmap, pathway, I should say, towards future growth, and talk very much about how, you know, international competitiveness and international connectivity, it was a key area for the UK and a key area for us on which to build our capacity and maturity as a market to take advantage of the sector leadership that exists here in organizations that are based here, but also for us to collectively create more opportunities for businesses to seek partnerships and to scale here as well. And on the back of yesterday's budget, we have had a huge financial announcement yesterday here in the UK, the annual budget delivered by our Chancellor of the Exchequer, and fintech innovation and support for research and development across technology was very much at the heart of that announcement. So we're pretty buoyed this morning in the UK by that. And that's really going to set us on a good stage for future growth over the next couple of years as well. In terms of particular segments within the market, we are seeing, you know, a huge interest in RegTech, a huge interest in the development of crypto assets and digital currencies, and finding a place for those. But we're also seeing, with interest, seeing quite a lot of growth in the retail tech space as well. A number of the buy now, pay later operators are here, Klarna being the market leader, but there are others such as OpenPay as well, are here and doing well. And I think it again leads to this crossover between how technology across financial services is now cutting into other areas of the economy, and those other areas of the economy are looking to fintech for a steer too in terms of implementation of products and services. So I would say it's a buoyant period for UK fintech. I haven't mentioned Brexit, and I won't, because I think that, although I'm happy to take questions later, of course, because actually I think the positives right now perhaps outweigh the negative impact of that decision in terms of the growth of companies here. And I'm not seeing a real diminishing of the opportunities to connect into other markets close to the UK as well. I'll pause there for now, but as I say, very happy to take more questions later. Thank you.
Thanks, Peter. I think it's a fantastic overview, and we're all very excited about the budget announcement. I'm surprised you didn't mention sort of the green tech, clean tech. So maybe we can unpack that further down the track in the Q&A, because I think that's also a very interesting area. And you recently ran a seminar on FinTech for Good, which I thought was fantastic and quite eye-opening in terms of what can happen in that area. Look, just a very quick follow-up, finance. Do you want to add anything on the role of Innovate Finance in promoting fintech innovation in the UK?
Sure. And thank you for reminding me on the green tech. Things have moved so fast the last 24 hours. We did indeed, and I'm happy to talk about the work that we've done around the FinTech as a Force for Good space, which includes the green space later as well. I mean, but that was one example really of where we are promoting other areas of FinTech, and where FinTech is, you know, not only a commercially successful area of the business, but area of the economy, but also lends something positive towards society. That's one of the things that we do promote, but we also promote FinTech companies as they grow in whichever segment of financial technology they find themselves in. We work with partners around the world, such as Austrade, who's a strategic partner of ours, with the likes of FinTech Australia, to ensure that those connections between our two markets are thriving. And we also work across the UK with a number of other trade organisations, some of the national organisations, such as the City UK and UK Finance, but also some of the regional and national organisations like FinTech Scotland, FinTech North, FinTech Wales, FinTech Northern Ireland, FinTech West, and something called Supertech in the West Midlands as part of a FinTech national network, a real family of organisations that are seeking to promote the sector right across the UK, wherever you choose to locate. So that's part of the other part of the promotional work we do. We also engage very seriously with government, and through our policy and regulatory team with domestic and international regulators, particularly the UK's FCA, of course, and there's something called the Global Financial Innovation Network, or GFIN. So we do have that connectivity as well to international regulators. So those are very important ongoing conversations that we lead to seek to boost the competitiveness and the continued innovation of the sector here.
Yeah, thanks, Peter. It's a huge ecosystem, but it's very exciting to be a part of it. Yes. JJ, I might go to you next. How does Think and Grow support Australian businesses with market entry into the UK?
Yeah, thanks for having us, Stu and the team at FinTech Oz, and thanks for also supporting us, Hannah, and having us along. Think and Grow basically works with Australian founders in teaching them, I guess, the lessons that we've learned over the last decade or so in terms of the challenges of entering into the UK market. We opened an office in the UK from day one, and have been working in this cross time zone, and the challenges that you face with things like that are new to some fintechs, establishing of the way that teams are working, their go strategy, competitive analysis, pricing analysis, hiring strategy, all designed to support international expansion, moving to a 24/7 clock to support customers, these are all challenges that regularly face startups entering the market at an early stage research development level in terms of preparing themselves for market. And then as businesses progress and are ready to go, we then support with that whole land and expand strategy. So PR, brand presence, product marketing fit, first 5 clients on the ground, hiring of the actual team physically on the ground. So I was lucky to make it back to Australia pre-COVID, because we were launching Zipco into the market and establishing their offices in and around London and Manchester at the time. And really, super accelerating their growth there. So we work with organizations of different shapes or sizes, but really we can do end to end, or we can just be selected to do 1 or 2 of those things depending on the client's needs. So hopefully that's a flavor of what we do.
Absolutely. And like you said, there's so many different factors involved in the expansion. So it's great to have partners like you to support companies through this. So Katrina, you've done it. You've entered the UK and EU market. How has the FinTech ecosystem impacted Miko, and what has been your general experience in the market?
I think following on from the things that that Jonathan just said, I think there are some key things to consider when moving from, first of all, being on the other side of the world, so that all of those logistical issues in terms of time difference and all of those things need to be factored in. But there are a few things that we did early on, which I think in hindsight maybe helped, and I think the key thing of deciding whether or not you want to be in international markets from day one is really important, because what it does is it creates a particular mindset. It also means that even as a small company, if you're bringing people onto the team, you're starting to think of that 24-hour clock. You're starting to think about, well, what does this mean from a culture point of view? And when we launched the company in 2014, we made the decision at that time to try and arrange some launch events in the UK, actually in Israel, in the United States, along with Australia, as a means of testing those markets. And part of that was just to have a sense that we'd have this marker, if you like, this pin in a market, which I think really helped us, because over the next year or so, we were doing the fly in, fly out. And obviously COVID has really, really impacted the ability to do that. But I think the next thing is, after sort of establishing that there is something that you can point to that shows that you're committed to the market, and I think that's really important. No matter how many times you're happy to get up in the middle of the night and join a call, part of it is making those initial connections, building that network, using some of the partners, using Austrade, using some of the partners that are on the call today to start to build that out. And then I think the first thing, the most important thing, is that first POC, proof of concept, proof of technology, proof of value. And as Jonathan said, obviously you want that to move on to product market fit, but being able to point to something that you've done locally is really, what we found was a really important first start, because what it does is it starts to localize and contextualize the discussions. Why? Because it doesn't matter how great anyone is in their home market. And of course, there are great things that you can speak about in terms of achievements, but people want to understand, well, what does that mean in this market? And so I would say, finding some way to create that friendly extended network as quickly as possible, even if that's just part of your kind of reconnaissance, even if it's just in terms of testing into the market. And then the second thing is getting that first on the ground opportunity. And if you can do that, obviously, with a brand, a partner that is recognized, then what it starts to do is to recontextualize everything you're talking about. And then anything you're doing in home market is still obviously relevant and a great opportunity to talk about, but you're able to frame that specifically around, well, what does this mean in this market? For us, we decided to, after about sort of fly in, fly out for a year or so, we decided to incorporate. We partly did that on the basis that we couldn't imagine Brexit happening. And we thought, you know, fantastic, UK based for all of Europe. We speak English. It's really, really simple. I think all of the really vibrant growth aspects that we're seeing sort of as we're coming out of COVID, and we're seeing sort of demand all around the world, and those strong indicators in the UK in the fintech market. There are still sort of differences now that we're seeing, because we ended up needing to incorporate in Europe, in Belgium, as well as the UK, to sort of service those markets in slightly different ways. And why is that important? Because some of the things like the automatic passporting or the ease of travel, or the extension of something that you're doing in the UK being automatically applicable in Europe, or vice versa. I think it's just wise for anyone thinking about those markets to really think about the UK and understand what's similar, even though it's very close to the rest of Europe, and also what's different, and then be really clear about what the value proposition is into that UK market. Because as Peter said, there is a big demand for growth, but that's all really about post-Brexit, the UK economy being very strong, very vibrant, and being independent. Yeah, I think I was listening to a podcast early this morning, and it was actually Tony Blair saying, look, once the decision was made, you know, the British response is, okay, let's make it work. Yeah, and so I think it's saying, okay, what are we doing? What are we bringing into this market, and how can we contribute in some way to that idea of making this work?
Fantastic, Katrina. Some great insights there, and I think that the understanding the market and ensuring that your value proposition and fit for the market is just so incredibly important. But also, I think in terms of being ready to tackle some of these opportunities, there's a lot of other factors like regulations. So, Peter, I might go to you next. What can companies do ahead of entering the UK market to ensure their business is compliant with local regulation?
Thanks, Anna. I think the first point is, just as Katrina was saying, really, is that the UK and Australia are not so different, and the same applies to regulation, really. So don't worry. Most of the major English-speaking common law jurisdictions borrow good regulatory ideas from each other. The UK regulatory environment, however, is quite immature, and with that comes with quite a bit of baggage. And the trajectory, as you'll know from most regulators, is always towards more regulation rather than less. So there's rather a lot to say, what could you do in order to comply with local regulation? So, I mean, as a lawyer, it's kind of difficult for me to pick out some of the regulation that's, I say, best to prepare for. It's kind of like choosing my favorite child or something like that. But there's a couple of things which I think compliance with which takes longer. And so it's perhaps something which Australian businesses might want to think about more earlier rather than later. The first thing to look at, particularly for FinTech, is whether you are something called a payment services business. And that is, in very, very broad terms, someone who accepts transfers of money. So kind of like a bank, but it's much wider than that. So it is money transferring through the service that you provided. If you are a payment service business, you come under the payment service regulations, and you'll need specialist bank accounts to do that. So Katrina might be able to say that getting a bank account in the UK, or even an ordinary business bank account, can be quite difficult. But getting a specialist bank account, which doesn't just accept deposits of your own money, it accepts deposits of other people's money, is especially difficult. And that can take months, and you probably need a specialist advisor to take you through that. A lot of that is investigation to your own business and the history of your business, and whether the UK regulator has enough faith in your business to understand that you are now accepting money from UK consumers. The second thing which I think would take longer to look at, is whether you require some form of authorization or regulation by the UK Financial Conduct Authority. The FCA, if you look at its website, rather usefully will say something like, we are the regulator of regulated activities, which tells you nothing. But the amount of financial activities, number of financial activities which are regulated by our FCA are very, very long indeed. It would cover things like offering credit. It will cover things like holding money on behalf of other people, transferring money, and this would include e-money or crypto, handling investments, whether as an agent or as an intermediary. So there's lots and lots of things. Insurance as well is another one which they cover. And insurance is quite a wide one. Some form of, let's say, protection plan. You pay a monthly sum every month in return for which you get some form of a service or protection. Then that will likely be an insurance. And that sort of thing is going to be regulated. And you'll need to, and if you are falling within one of these areas of regulation, you'll need to be registered with the Financial Conduct Authority. That can take, a quick one will take about 6 months, but you should plan to 6 to 12 months to do that sort of thing. So if you're doing those sort of things, and those are quite good regulatory areas to look at earlier rather than later.
Thank you, Peter. And of course, we're very fortunate in that we do have the UK-Australia FinTech Bridge, so it does create kind of a more streamlined access into FCA, and it does help you navigate some of those regulatory challenges. But I certainly don't want to underplay that there's a lot there to consider, and you do definitely need to consider that ahead of time. So look, Peter, you've already touched on a couple of aspects of the regulatory environment. Is there anything else you wanted to add in terms of some of the other aspects to give a kind of a further overview of the, I guess, of the regulatory environment for the fintechs?
Yeah, I think a good one would be our privacy legislation within the EU, within the UK. Very similar legislation applies throughout the EU. I mean, it is often described that our regulation of privacy is actually quite draconian in the UK and the EU. I don't actually think of it that way. I think not draconian. It's more you have to be very clear about what you're doing, and you have to jump through the right hoops in order to make sure that you're fully compliant. One of the earliest tests that you'd have to do is decide whether, in terms of the legislation, whether you're processing as a processor or processing as a controller. And this is something which you might want to analyse with local lawyers earlier rather than later. And it carries quite a fundamental difference. Most pure tech companies are going to be processing as processor, and that sort of thing carries less regulation. However, if you are doing something like, if you're a business that uses information about a person to train a machine learning model, some people call it AI, lots of fintech does that sort of thing. Or you're in a business like Katrina's, for example, you're more likely to process as controller. And in that situation, you have a lot more regulation to deal with. And mostly what you have to do is, to an extent, form filling and making sure you have the right contracts in place. So, for example, you might need to issue something called a privacy notice to people saying, look, this is the personal data that we are taking, and this is what we're going to do with it, and these are the controls we put in place. There's similar rules happening in Australia. I know it's a slightly different regulation, but you do have to tell people what you're doing with their data. You might also have to understand where in the world their data is going, and you may have to put in a network of contracts with your providers which are compliant with UK EU privacy legislation to ensure that transfers of data from outside the UK EU jurisdiction to somewhere else, Australia or the US, or some form of public cloud solution, that can be done lawfully. But it's something which local advisors should be able to advise on very easily, but make sure you have quite a specialist advisor initially to determine the first question, which is processor or controller. Touch on a couple of other things. We have some anti-money laundering legislation, which applies in the in the UK. And most of you who are looking to sell to financial services company within the UK will come across this, because every financial services company will need to check for every single supplier it has whether who their owners are. Now, for most businesses, it's really easy to work out who your owners are. You just look at the registered shareholder of them. But if you are if you have some form of venture capital backing, a lot of venture capital companies actually have more obscure ownership structures, and I've seen quite a few where their ownership structures end in a blind trust in a low tax jurisdiction. So if you are looking at if you do have one of those structures, be prepared to answer the questions as well as you can as to who actually owns you, and that is something that's fundamental to all to compliance with anti-money laundering legislation. One other minor thing, but is quite often a slip up, is the modern slavery legislation. Now, I'm a lawyer. My business has to comply with modern slavery legislation. I don't think there are very many modern slaves in my business, but the reason why it's quite problematic is it applies throughout a supply chain. So we have to look at everyone we buy stuff from. This would include things like stationery, paper, and envelopes and things like that, to make sure that none of them employ child labour or employ people in jurisdictions where there might be some history of modern slavery, people being paid low wages. So that's something which is another nice compliance thing which you might want to look at your supply chains for, to see what you can do to actually just be able to tick that particular box whenever you're looking to sell to a financial services company.
Thank you, Peter. I think there's some incredibly valuable insights there for the audience to take away. Katrina, I might go back to you. I'm keen to learn from you about the milestones involved in your expansion and setting up in the UK, and also what were some of the challenges that you encountered, anything that might surprised you, and any solutions that you found to those challenges.
I think there are some of the things that Peter's just talked about now, and I think one of the benefits is kind of understanding that there are similarities with regulatory frameworks or rule of law. I think that's helpful, but also things like a pain point that Austrade has heard us talk about in the past is small administrative things that may be a hiccup, like, for instance, getting a bank account established. Everything that Peter's just talked about in terms of getting set up or beneficial ownership, being able to say, okay, we're about to embark on a particular strategy. We're really confident we'll be able to get through KYC. I'm here on the ground. I can physically go in and do whatever I need to do. But the other directors are in Australia, or a beneficial owner who is a shareholder may actually need to join that process. And then it's, okay, well, hold on a second, that person's in Australia. So kind of understanding, I think, what some of those processes are in advance are really critical. Why? Because they'll have a time impact. And I think from a technology point of view or a product point of view, it's often that product or capability to deliver is the least hurdle. It's, okay, well, what's the environment it fits into? I think one of the advantages for us, and it's something Peter's just touched on in terms of privacy regulation. When I started the company, we imagined this issue of data processing, data controller, data access, data value was going to be alongside energy, probably one of the greatest opportunities and challenges to the decades ahead. So what we focused on is creating this bridge capability so that the sectors we focus on, financial services, telecommunications, government, large multinationals, could start to offer more personalized services to their customers, but in a transparent and privacy enhancing way. So that meant for us, we needed, because of the the way our technology works, we often sit between a data holder and a data recipient. And so we needed to move between this processor and controller. So we made the decision really quickly to choose the most, what's the right word I'm looking for? To choose the regime, and we chose GDPR, that would provide the most robust requirements for those roles and actually bake that into our technology. So I think these similarities are great, but some of the things that we could do, for instance, in markets in Australia, although things are changing because of the consumer data right in Australia, but things that we might have been able to do in markets like Australia or in the United States were very different. And when we first entered the market, the UK was completely aligned to GDPR, and there's some question now as to whether or not those things might change. But understanding, yeah, and Peter, I think if there can be some harmonization and that for that to remain, it's really critical, because I think it will become even more complex in the FinTech, in the RegTech sector, if things become too specific by a single market. And what I hope is that, and particularly when we see some of the things that are happening right now with the Facebook papers and some of the issues of some of the changing regulation here in Europe around data access, data governance, we probably need to get to some sort of harmonized regime around data processing. Why? Because it also then does start to touch all of those commercial things, because it touches your employees, it touches your partners, and it touches the way you may deliver a product into market. So I think for us, we were anticipating something like GDPR when we moved into the UK, and we decided to choose that and bake that in. And so I think one of the other lessons for us, we were always thinking we need to make sure that we're responding to the commercial, to the legal, as well as the technology. And even though we are a technology company and probably have more control over what we build, what we sell, how we run and operate, doing that in isolation of those commercial and regulatory considerations can mean that you have a great product and great product fit, but then not able to move into sort of implementing and scaling. So I think they were some of the really important things for us. I think the other question that I would have now, and I don't have the answer, because first of all, we're doing this webinar via Zoom, and we're all used to talking to each other through a camera right now. It'll be interesting to see if that's going to make it easier for Australian companies over the next 6 to 12 months, because everyone's used to connecting this way, or whether that boots on the ground, connecting with people, meeting and establishing those relationships, whether that is going to be as important. And the reason I say that is I still think it'll be, my sense is, a year, maybe 18 months, until we can start to confidently move between Australia and the UK and know that when you arrive, there isn't going to be some sort of change. Okay, there's going to be a lockdown for 14 days, or you can't fly through Singapore, or okay, this state in Australia has decided it has to do this or that. And so I think being really clear around a dual strategy for boots on the ground, or building your network and having those relationships to leverage technology, is probably going to be really critical over this next 18 months to 2 years.
Yeah, no, it's spot on, Katrina. And yes, it's something we're all wondering, which way is it going to go? Is it going to be easier, or is it going to be harder? So something to watch this space. JJ, what does Think and Grow look for in a business to be successful in a new market entry?
That's a big question. I'll sort of break down a few things that lean into some of the stuff that Katrina's mentioned. But if you think about looking at what successful businesses do, and therefore applying, that kind of thesis back, what you want to find from a company that's ready to expand and for us to engage fully in a full market entry strategy to go today. So hire the first 5 in the team, commit to sales. is product market fit, you know, in terms of their existing market, and are there any global clients that they've got within their existing portfolio that happen to be based here where they can easily linchpin into another market with. They need to have their funding secured within the co-founding team. What we find with international growth is founders don't get on with which country to go to and why, and what's the commitment of revenue to that business line or to that market in advance. And we sort of look at the UK market as about a 1.5 million AUD investment over the first 18 months. They can't commit that amount of AUD to it. It's a really big challenge in terms of actually getting a proper sales team and a growth team on the ground. The commitment in terms of flights back and forth, which obviously we're unsure whether that's going to happen or not, and the product marketing and brand support to really lift up. And we talk about 1.5 million as all of the salaries and the on costs, offices, etc., travel expenses back and forth to Australia, plus onboarding in the market with all the other expenses that come with that. As a relative for a good solid entry, not big. You know, when we're talking about Zip, we went from 0 to 25 people in 3 months. That's pretty aggressive, plus all the marketing and everything else. So what we're looking at from people is really, have they got the budget? Are they agreed? Are they aligned on the strategy? Have they got the org design set up in HQ to support expansion while they're still trying to build RE, customer success, support, onboarding of new customers in the right time zone? These are all failings of businesses in the past. So if they haven't got that set up, then obviously we'll have to help them fix it. But ultimately, if they've got all these things, then they're good to go. Allocations of budget for product marketing and nuances that need to change in terms of the wording to suit the market. All of these things come in the preparation. So there's a number of different aspects that they're sort of some of the key ones that always resonate with us. And I'd say probably the final one that I find kind of is quite often missing is that they haven't done any competitive analysis on their product. So when they go to market, they kind of assume that it's just going to be as easy as it was in Australia to grow and scale their product. And they're just not aware of localized products that are in market, be it US ones that have gone there. They might have just done the research on UK companies and UK companies competing in FinTech, but not considered European or US ones that might be in that market. And it seems quite obvious, but it's amazing the bits that get missed when someone's really backing their own product into a market.
Thanks, JJ. Yeah, all the things that really resonate with me as well, and all the fintechs that we're working with and things that we're looking into.
Oh, I've got one final one. This is a funny one. So for some reason, and I've done this for Kiwi business as well as Aussie, some companies only have a .au or a .nz website. That's not cool for global. You really need to have a global website like a .com or .io or .co. It just shows that you're not really thinking globally. Sorry to interrupt you. I just had to add that one in.
That's spot on. So look, I'm very much conscious of time, and we do want to leave a few minutes for questions that are coming through the chat. So I might just wrap up here and hand over to Stu. But when Stu throws questions to each of the panelists, I would like to ask you to also share a piece of advice with Australian fintech exporters that are interested in this market. So maybe as a follow-up to the answer that you give, also please mention one piece of advice from you for our audience. But over to you, Stu.
Great, thanks so much, Anna, and thanks everyone for sharing your thoughts so far. We've had one question come through, and JJ, you did touch on it there briefly, which is great. So I might hand over to Katrina for this one if possible, because you've expanded a team into the EU or the UK. So the question comes from Bruce, and it is, what type of budget should a small fintech plan to invest in year one in the UK? 2 to 5 staff on the ground and a FIFO plan as well.
So I think JJ picked up on some really important things. That's part of the strategy is founder, co-founder, or the team in Australia are going to try and do that initial push in, or whether or not you're going to start a team. And that's going to change the metrics one way or the other. And there are pros and cons of both. I would say if you're not sure about that, and notwithstanding, we don't know how easy fly in and fly out is going to be. For us, you know, the reality is we really bootstrapped our way into market because whilst we had raised funding, we had milestones back in Australia, we wanted to show product market fit outside of Australia because interestingly enough, we didn't think the Australian market was ready for what we were doing. We didn't have the same drivers in the Australian market around privacy or GDPR or the same rapid need kind of in the digital channels, although we're seeing all of that in Australia right now. So part of it was, okay, and you know, I'll be really frank, you know, I have some close friends in the UK that made our market entry really possible, even though I probably drove them crazy, you know, sleeping in their spare bedroom and being sort of a constant house guest, with them constantly hearing me on calls at all times of the night and day. But finding ways where if it's about testing the market, you can afford to do that. Or as JJ is saying, okay, no, we're really clear, we're committing, and therefore we're going to put whatever that amount is. And he's just talked about, you know, 1 million plus into hiring and putting people on the ground. Even if you hire and put people on the ground, you will still need to be that culture bridge. You'll still need to be that vision bridge. You'll still need to be that authenticity bridge, yeah? Because you can't just hire 3 or 4 people and say, okay, this is what we do, go off and do it. And so whether or not that is something that you would still do by spending some time on the ground. So I think there are 2 strategies. There's bootstrapping in, getting that first POC, getting that product market fit, and validating why you would then invest. And then the second thing is saying, okay, with this validation, what is it that we're going to invest, and making sure obviously that aligns to the objectives of the company and shareholders, and you have the support that's needed, because everything that you've just achieved in Australia, you'll need to do all of that again in a new market. So you may have reached a certain place where things are humming along in Australia, and then it's kind of back to basics in the UK. And so you also have to manage those maturity levels. And we've all sort of mentioned this a little bit today, is that the time difference, 6 months of the year, it's not so bad. But for 6 months of the year, and we're just moving into that change now, it's really brutal. So you're going to be asking a lot of yourself and your team members and your employees to get up in winter when it's dark and it's cold in the UK and get on a call with the team in Australia, you know, and it's summer and it's the end of the day in Australia and everyone just wants to get out of the office, or vice versa. So don't underestimate some of these small cultural things that can mean everything's going along really well from a market point of view, and then all of a sudden someone says, you know what, I just don't want to do this. I don't want to be on calls early in the morning, or I don't want to be doing this, you know, in these different time zones. So actually understanding that people are export fit within the organization, I think is a really critical part of the cultural lens that you need for building between these 2 time zones. And if you're in Europe or in the US, it's not so bad because those time zones are friendly, but we know Australia to most other parts of the world, we're talking about everything being the opposite. And so understanding what those impacts are, I think, are a really important part of the fitness you need, and also the type of culture and maturity that you want to be fostering inside your organization. I think those things are equally important to product market fit.
Thanks very much, Katrina. That's great. For everyone who is here, stick around. We've got about 5 minutes left to go, and we're finishing up with an awesome message from Investment New South Wales as well. So stick around, but a couple of more questions just coming from me here. And thanks, Bruce, as well, for the question you popped in. This one is to Peter Budd, and maybe we'll give you 2 sentences to answer, but one lasting piece of advice that you would give to an Australian fintech looking at the UK.
Sentences, great one, Stu. Okay, make yourself easy to buy. And from a compliance perspective, I think there's two aspects to that. Be prepared for long and detailed information security questionnaires from UK customers. They are brutal to look at. If you want your best place to answer those, have a look at what ISO 27001 says. A lot of those questionnaires are based on ISO 27001. If you can get ISO 27001, all the better. But even if you don't, look to it to see if you can be making in a better position to show that your information security practices are something which will be familiar to the UK.
Great, thanks very much.
One other quick one, if I get another sentence in. Making yourself easy to buy. Perhaps it's not really legal, but perhaps design your commercial solution so that your customers are not expected to have large upfront non-refundable payments or subscribe to long fixed time periods. That makes you more difficult to buy and puts more effort on the lawyers to cover legal risk. Because if you got something which is, let's say, easily cancelable because it doesn't work or something like that, from the financial services company's perspective, you become a much easier decision to buy from you is a much easier decision.
Thank you, Peter. And over to Peter Canane. This question has come through from Bruce, but London or the regions? And you don't have to choose, but maybe a couple of words on each.
I'm not going to choose, but what I will say is London is not for everyone. There's obviously a great ecosystem in London, and certainly you will find the majority of those providing capital and investment are based in the centre of London. Although these days, with the rise of Zoom and virtual calling, that connectivity to investors, even if you're outside of London, is improved significantly, I've been told. And other areas, regions, cities, towns across the UK all offer something very individual or different. And if you're a cyber business, you may want to consider Belfast. If you're a payments business, you may want to consider one of the northern cities, or Manchester or Leeds. If you've got a strong connection to asset or wealth tech, then Newcastle or Scotland might be more for you. There's some fabulous parts of the UK to set up in without the costs of living in the capital.
Thanks, Peter.
And
sounds like there are
piece of advice very quickly, network. And I know we had a comment from one of the guys over at DIT. They're a great partner to connect in with as well.
Thanks, Peter. Sounds like there are a lot of homes to awesome businesses. It's a big market, that's for sure. And JJ, quick question, quick response. A lot of fintechs are having trouble accessing really good talent in Australia. That was one of the #1 issues at FinTech Australia's Intersect conference. How is it over in the UK from your view?
Quite frankly, there's more people there. That's pretty obvious. So that makes it easier. I think just answering some of those other questions about the region into the talent thing that's relevant for what we're talking about today. So I'll keep it as short as I can. The cost of staff in London is more expensive than regional. What you've seen with COVID is a lot of people leave London, move into regions and now not bothering commuting. And a lot of businesses are offering the reality of not commuting. So what that can mean is there's more affordable staff, and you don't have to have a HQ anymore in London. You can have remote workforce. And very early days at Zip, we said to them, to get the talent in, you're going to have to look across the whole nation. So we're hiring people in Wales, people in Bristol, people in Manchester, Leeds and London to give them a better footprint and better coverage. So depending who your market you're selling to is, you're going to probably have a regional sales team anyway. So there's considerations to have. London is super aggressive in terms of the style and how recruitment is done compared to Australia. So if you talk about specific growth and salespeople, if you look on LinkedIn in the UK compared to here, 1 in 10 people in Australia that says they're sales is the salesperson. The rest are account managers. In London, it's about 50-50. And the salespeople in London are on average 5 to 6 times better than that in Australia in terms of the quality output of return of investment on the amount of sales they can do and the quality of sales they can do from a cold outreach viewpoint compared to that of an Australian salesperson today. And that's because Australia has risen and grown up, meaning everyone who was doing sales, the phone rang. Whereas in London, much more competitive, people have to pick up the phone and physically make that. So there's much more training, much more development of sales techniques there than there is in the UK. The fight for talent, though, is still as tough. especially when you're not a brand that's recognized in that market. And that's a reality check for everyone that enters a new market. Sorry, that's as short as I can make it, Stu.
No, that's great. I give a short question and then beautiful long responses, very detailed. I would now like to introduce Katie Heathcote from Investment New South Wales. She's got a really quick message for all those fintechs out there.
Thank you so much, FinTech Australia and Austrade, for having me. And hi, Katrina. It's so nice to see you. You have no idea. Anyway, just wanted to plug, we are doing a Going Global program for financial technology companies to the UK that will be kicking off shortly. So applications are now open now. I'll put the link up in a website, or you can email me directly. Basically, what we're trying to do is run over a course of 3 to 6 month program where you can virtually tap in, although now borders open, you might be able to fly to the UK, where you attend workshops, get your product and market validated, get pitch coaching, and the best part is, so you're ready to go and sprint on the ground once you get to the UK. And we will be making business introductions to you with potential partners and customers, and also get you across all the regulatory piece as well, and meet all your needs. So it's all free. It's valued at quite a lot of money. So we're being quite closed with the group that we select, but it's open now. So I encourage you to apply if you're a fintech looking at the UK market. Great, thanks so much for having me, and I'll put the link up in the chat if I've got 2 minutes to quickly put it. Thanks.
Thanks very much, Katie. And just from myself and from FinTech Australia, a huge thank you to all of our panelists for sharing their insights and experience this evening or this morning for the UK tuner-inners, and our panelists, our participants, sorry, and guests. Thanks so much for joining as well. I'll now pass back to Anna to wrap up the session.
Thanks very much, Stu. I'm going to be very quick because I'm conscious we've gone a little bit over time. So echo the big thank you to the panel, big thank you to participants, and definitely check out the program, the New South Wales program. It sounds very fantastic, and we're certainly together with states and territories trying to do more to provide you access to this market virtually while the travel conditions are a little bit tricky. So to find out more about the services that can be offered by Austrade, you can go to austrade.gov.au FinTech exports, and that will give you insight into all of the various digital tools that are available to you, to events and webinars that we're running, as well as more hands-on programs and academies that we're delivering as well as access to our Accelerate program, where we can work on one-on-ones, hands-on includes Stu and FinTech Australia, because we partner up on that and work very closely together on that. But look, I'll leave it there. Thank you all, and yeah, please reach out to our team, to Stu and others if you want to follow up on any of this information. Thank you.
Thanks so much, everyone. Have a great day.
Thank you.